Hello traders, today is the 10th of March. My name is Neville Hornsey, market analyst YouTrading, and today I'll be looking at the euro versus the Canadian dollar. Okay, starting with the YouTrading.com forex heat map, we can see here the Swiss franc and the yen and the euro are weakening. The bottom left-hand corner is green, so we're seeing moves into the commodity pairs and out of the safe havens. So more of a risk on day to day. So moves into commodity pairs, moves into equities most likely. Going to the news, we can see here that the ECB deposit rate for March came in as expected and didn't change from the previous rate. ECB refinancing rate for March also came in as expected and the same as previous. They did start to mention that they're going to reduce their asset purchases both in the PEP and the APP, and the Eurozone money markets are now pricing in a 40 basis point hike by December 2022. So they're expecting the ECB to actually stop purchasing any more bonds in the future. We are seeing inflation rates being projected to go higher for the next couple of years. If we go to the active trader platform, this is the hourly chart on the Euro CAD. See here this big green candle on the statement. The money markets got excited by the more likelihood of a rate hike. So we're expecting to see the euro strengthen. That's the sort of narrative. So all they did was they took out the swing high from yesterday. And so we took out yesterday's high and then we reversed all of that. So anybody that was long is now trapped. And we've gone past the high of the sort of 11 o'clock candle here. And now it looks like we're going to come back down, test the 200 EMA at least. Right, so what am I looking for? I'm looking for a significant low to be taken. This low here from London breakout. If that gets taken, then I'll be looking for a change in direction. So we've got a breakdown here, possible change of structure. Then come back up, see if there's an imbalance to sort of test before resuming the lows. That would be in line with the daily trend. And the target would be the imbalance that was left from this breakout on the 8th of March. So we had the high of the 7th of March. That hasn't been tested again. So we've got this imbalance between that high and the low from the 9th of March still to sort of fill in. So that's the trade I'm looking for. I'm looking for everyone to have got stopped into a long to sort of maybe go and test one of these levels up here. Obviously, we've discussed before previously, at the beginning of March, that most of this price action is actually being tested. So the market structure, where we broke this swing low and the trend and the momentum is to the downside. So the path of least resistance is to the downside. So now that they've done that thing where they get people excited about going long with the promise of higher rate hikes, I'm expecting, like I said, to see everyone that's trapped long to puke their position and for momentum to sort of come back down. Those speculators to take profits quite quickly around a swing low here. And then, the sort of more informed traders to at least target down to the 1.395, assuming that we get a pullback before going lower. So that's the idea. If we go to a monthly chart, everything that we've sort of discussed so far in March has come true. If we look to the left, we had this high from April 2015, which was tested in 2017. That swing low from 2017 was swept. So we did actually have a short trade on earlier this month. And that came off the back. If we go back to a daily chart. So if I make this one green, no, red, sorry. So on this day here, 4th of March, we had a short trade from the 1.402 that was targeting that swing low that we just mentioned on the monthly chart. That sort of worked out. Then we sort of waited to see what would happen. Obviously, that level that we got short from before is probably going to act as support, where it was a resistance becomes support. But like I said, I think the biggest move here, sort of tell, if you like, is that they swept yesterday's high and now they're going to come back down and fill that gap. Then from then on, depending on how much more of the rate hike decision is likely. Obviously, ECB, as all of the central banks now have to consider the Ukraine situation. The Bank of International Settlements have just stopped dealing with Russia. So things are getting very serious, both for Russia and Ukraine. Obviously, Ukraine's suffering from the aggression of Russia, but Russia's also suffering from the sanctions. Europe is tied both politically and geographically to those nations. So, it'd be interesting to see how the banks react. Obviously, higher inflation's coming. The central banks seem to think that raising rates is the way to go. And if so, the money markets may actually push the ECB to raise rates. Generally, the central banks seem to follow the money markets. But for now, just as a short-term trade, I just want to sort of fill in the sort of spaces in between these candles and then not marry a trade, just wait to see what happens. The market is volatile. Things are moving quickly. Markets are reacting to news, and we just need to be sort of more nimble. I hope that makes sense, and I'll speak to you again tomorrow.